this video, I am going to explain why obsessing over investment performance when you've got a really small portfolio is a complete waste of time, and what you should be focusing on instead if you're actually serious about building wealth. When you're starting out, it's easy to get swept up in comparing returns, looking at how much you made, whether you beat the market, and if you outperform that Bitcoin bro that you were talking to. But for small portfolios, and I'm even talking portfolios up to say 100,000, well, you're just focusing on the wrong thing. Let me explain. Let's pretend that you are the new Warren Buffett of the 21st century. The broader market has returned 9% per year, but through your sheer brilliance, relentless research, you've managed to pull a 15% return. Now, ignoring the fact that the data overwhelmingly shows that you're unlikely to do this consistently over time, there's a bigger issue at play. The dollar impact that you've made on a small portfolio doesn't move the needle enough to impact your life. If you invest $10,000, a 9% return is going to give you $900. Your stock picking genius got you $1,500, the 15% return. Now you've spent your time, energy, and emotion for an extra $600, which doesn't even cover the cost of petrol for a year. Now let's scale it up. If you had $100,000 invested, that outperformance delivers an extra $6,000 per year, which is great, but you've got to ask yourself whether the effort, the attention, the extra risk that you took on was really the best use of your time. Instead, you should be focusing on where the real upside comes from, and that is earning more through your personal exertion, your job, your career progression, your business. Your income potential is basically uncapped. And now if you want proof of that, look no further than good old Elon Musk. But increased earnings requires taking risk, because applying for that high paying role, well, the grass might not be greener on the other side. Starting a business, it might feel like in the first couple of years, it's non-stop hustle with very little reward. That small portfolio that you are so focused on investing, along with your emergency fund, well, that plays a key role in increasing your income because it gives you the financial breathing room that you need. Now that is the real power here. The more money you have, the more options you have. That little nest egg that you're obsessing over, it exists to give you the courage to chase that extra $2,000, $3,000, $5,000 per month from your career. Not the extra $600 you get by beating an index fund. You get the extra income, then all of a sudden you have significantly more capacity to contribute into your investments. Now, of course, returns matter, costs matter too, but don't let the pursuit of a few extra percentage points distract you from the bigger opportunity cost at play here, and that is building your income. As your wealth grows and once you reach a level where a few basis points actually equals tens of thousands of dollars, then yes, seeking that edge makes sense. But when you're just starting out, the extra return, it doesn't do enough to move the needle. This is why in our investment philosophy, we adopt a core-only approach for smaller portfolios. We keep it simple, low cost, broadly diversified. As the investment pool grows, that's when we transition to a core satellite approach, where the active tilts can meaningfully impact outcomes. But that's it for me today, guys. I just thought I'd have a quick little ramble about this because it's something that I see too often. But if you did like this video, give it a thumbs up and I will see you guys in the next one.